Welcome back to the Central PA Property Talk podcast. I'm Brian, and I'm here with my co-host, Chris. We're your local guides to real estate in Lancaster, York, Harrisburg, and all of central Pennsylvania.
Hey everyone, today we're tackling a question that hits close to home for a lot of folks in our area. How to sell your house when you're still making mortgage payments.
This is coming straight from 717 Home Buyers in Lancaster, where we see homeowners wrestling with this challenge every single day. Chris, you know this feeling, that sense of being trapped between what you owe and what you need to do.
Absolutely, Brian. It's that awful, stuck feeling.
So let's talk about the real problem first. We came across this story on Reddit from a Pennsylvania homeowner that really captures what so many people are going through. This person said, I bought my home in 2020 with a 3.2% interest rate, and I've got $115,000 in equity, but I can't give that up. If I bought the same house today at 6.75%, my payment would be $500 higher.
Right, that's the trap so many homeowners feel caught in.
And here in Central PA, we're seeing this play out in real time. Rising inventory in Lancaster County, slower sales in York, longer days on market in Harrisburg. People need to move, maybe for work, maybe for family, maybe they're facing financial pressure, but they feel handcuffed to their current mortgage.
Exactly. And what they don't realize is that carrying costs keep piling up every single month. Now, Brian, you keep mentioning carrying costs. What exactly are carrying costs when it comes to selling a property?
Great question. When you're carrying two properties, you've got mortgage payments, property taxes, utilities, insurance, and upkeep. In Lebanon County, that could easily be $2,500 to $3,500 a month just in carrying costs. That adds up fast.
That's brutal. So what are the real options here, Brian?
There are really three main paths. First, you can list with a realtor. The pros are you might get top dollar if the market cooperates, and you can wait. The cons, in our central PA market, homes are sitting longer. You're paying carrying costs while you wait, plus realtor commissions, and there's no guarantee on timing.
Right. And option two?
Option two is renting it out. Some people think this solves the problem, but now you're a landlord. You've got tenant issues, maintenance calls, vacancy risk. And if your rental income doesn't cover your mortgage payment, which is common with today's rates, you're still paying the difference every month.
That makes sense. So what's option three?
Option three is selling directly to a local cash buyer. Companies like 717 Home Buyers can close in as little as 2 weeks, pay off your existing mortgage at closing, and eliminate all those carrying costs immediately. You get certainty on timing and price, no repairs needed, no showing disruptions.
Now, Brian, I know some people hear cash buyer and think they're going to get lowballed. Can you address that concern?
That's a great question, Chris. Yes, cash buyers typically offer less than retail market value, usually around 70 to 80%. But here's what people need to consider. When you list with a realtor, you're paying 6% commission, maybe 2 to 3% in closing costs, and potentially thousands in repairs that come up during inspection.
Plus all those carrying costs while you wait for a buyer. When you factor in time and carrying costs, the gap between retail and cash offers often shrinks dramatically.
Okay, let's get into a typical example. Tell us about that Lebanon scenario you mentioned.
Great case study. Consider this very common scenario we see regularly. A couple in Lebanon who had already purchased their new home but hadn't sold their old one. They were paying 2 mortgage payments, about $4,200 a month total. The husband got transferred for work, so they had to move, but their old house just wasn't selling through traditional channels.
Wow, $4,200 a month. That's unsustainable.
Exactly. They contacted us on a Tuesday. We had an offer by Thursday, and we closed 2 weeks later. Here's how the numbers worked. Their outstanding mortgage balance was $187,000. We bought the house for $235,000. At closing, we paid off their $187,000 loan directly to the bank, covered their closing costs of about $3,000, and they walked away with $45,000 cash.
And just like that, no more double payments. That Lebanon story is perfect, but let me share another common scenario that might hit closer to home for some listeners. Here's a typical situation we encounter frequently. A single mom in York who was going through a divorce. The house was underwater. She owed more on it than it was worth in the current market.
Oh, that's a tough situation. What happened there?
Well, she owed $165,000, but the house was only worth about $155,000. She couldn't afford the mortgage payments anymore and was facing foreclosure. even in that situation, we were able to help. We negotiated with her lender to accept the short sale, bought the house for $155,000, and she walked away without a foreclosure on her credit report. Sometimes it's not about making money on the sale, it's about stopping the financial bleeding.
That's such an important point, Chris. Not every home sale is about maximizing profit. Sometimes it's about protecting your credit, reducing stress, or just moving on with your life. And the short sale process, while complex, is something experienced cash buyers handle regularly with lenders.
Right. In that scenario, they went from financial stress to financial freedom in 2 weeks. And that's the key point. When you sell to a cash buyer, we handle the mortgage payoff as part of the closing process. You don't have to worry about coordination or timing. Before we get to our takeaways, Brian, let's talk about timing. When should someone start exploring these options? A lot of people wait until they're already in crisis mode.
Excellent question. The best time to start exploring your options is the moment you think you might need to move. Don't wait until you've already bought your new house. Don't wait until you're behind on payments. And definitely don't wait until foreclosure papers show up. The earlier you start, the more leverage you have and the more options are available to you.
That's really helpful context. And Brian, for someone who's listening to this and thinking, this might be me, what should they do today? Like, what's the first concrete step?
First, get clear on your numbers. Know exactly what you owe, what your monthly carrying costs are, and get a realistic idea of your home's current value. Not what Zillow says, but what comparable homes in your neighborhood have actually sold for recently. Second, call and get a no-obligation cash offer, just to know where you stand. This gives you a baseline to compare against other options. Third, run the math on how much each month of delay is costing you. Sometimes seeing that number in black and white makes the decision much clearer.
So let's wrap this up with some clear takeaways for our listeners in central Pennsylvania.
First takeaway, you absolutely can sell your house even with an active mortgage. The mortgage gets paid off at closing. It's that simple. Second, every month you wait costs money in carrying costs. If you're paying $3,000 a month in extra expenses, 6 months of delay costs you $18,000.
That's a big number. What else?
Third, local cash buyers can simplify the entire process. No repairs, no showings, no uncertainty about closing dates. And finally, don't wait until you're drowning in payments. The earlier you explore your options, the more choices you have.
Perfect advice, Brian. If someone listening is facing this situation, what should they do?
Pick up the phone and call 717-321-SOLD. That's 717-321-SOLD. Or visit us online at 717homebuyers.com. We'll give you a no-obligation cash offer and show you exactly how the mortgage payoff process works.
Thanks for listening to the Central PA Property Talk podcast. I'm Chris.
And I'm Brian. We bring you local stories, real advice, and honest talk from 717 Homebuyers right here in Lancaster, Pennsylvania. Until next time, remember, you're not stuck, you just need the right solution.